Hello everyone. In this video, I will be discussing off-balance sheet risk. One of the most striking trends for many modern financial institutions has been the growth in their off-balance sheet activities and thus their off-balance sheet risk. While all financial institutions to some extent engage in off-balance sheet activities, most attention has been drawn to the activities of banks, especially large banks. By contrast, off-balance sheet activities have been less of a concern for smaller depository institutions and many insurance companies. An off-balance sheet activity, by definition, does not appear on the financial institution's balance sheet since it does not involve holding a current primary claim or the issuance of a current secondary claim. Instead, off-balance sheet activities affect the future shape of a financial institution's balance sheet in that they involve the creation of contingent assets and liabilities that give rise to their potential placement on the balance sheet. Thus, accountants place them below the bottom line of a financial institution's asset and liability balance sheet. A good example of an off-balance sheet activity is the issuance of a standby letter of credit guarantees by insurance companies and banks to back the issue of a bond, bond issue or a trade contract. Many foreign trade transactions do not take place without bank or insurance company letter of credit guarantees that promise payment to suppliers should the buying organization default on future obligations. Similarly, many corporate bond issues would not take place without such guarantees. Nothing appears on the financial institution's balance sheet today or in the future in the case of an off-balance sheet activity. However, the fee earned for issuing the letter of credit guarantee appears on the financial institution's income statement. As a result, the ability to earn fee income while not loading up or expanding the balance sheet has become an important motivation for financial institutions to pursue off-balance sheet business. Unfortunately, this activity is not risk-free. Suppose the corporate bond issuer defaults on its bond interest and principal payments, then the contingent liability or guarantee the financial institution issued becomes an actual or real liability that appears on the financial institution's balance sheet. Uh, Thank you very much. That's all of our discussion about off-balance sheet risks.